Okay, cool. Thank you, everybody who is tuning in tonight. And for those who will watch this later on, we have a special guest tonight. It is our glorious leader, Luke. So, Luke, thank you as always for when you do show up, even if it is sitting in bed.
Yay.
So I know Swooping Hawk said her schedule is moving around a whole bunch, so she might show up later as well. So who knows? Maybe we'll have multiple people, but we'll start out and go and tackle what you call it if she does show up. So as usual, as always, we'll start out with our high to low time frame, since we have had a couple of big changing time frames here. Some essentially new months started, so marking some new levels off of interest, and we'll see. I tried to, like I said earlier, I tried to mark up some of the stuff ahead of time, but had some issues with trading view. So we might do some stuff stuck, some stuff we might need to do in real time as we're going through it. But we'll start, as always, our monthly. No big change, obviously, down here. We finally have an untapped to the upside that's not too close, something that isn't $20,000 away. So the fact that we're so close to it, always, potential threat, considering what's the $2,000 away or so, 2,600. So always a possibility. We'll look at seeing the lower time frames if there's some other reason to potentially swing up there. Otherwise, below us, same level as before. And last month, with that pretty heavy swing down, we cleaned up most of the gap essentially from back in March. But obviously, there is still some there, and we'll have some stuff on the lower time frame. So, looking at the lower time frame in the weekly, let's see here. I marked off order blocks, weekly order block, kind of. This one isn't so much. This is just kind of our current high, but this one is that obviously the last down candle before the 26% move up back in mid-March. We've talked about before that this is a potential place that if we're going to see higher, if we're going to see lower before higher, this is potentially a good place for things to pull back because, again, huge gap here. Liquidity with the naked point of control, untapped level, and this was clearly a demand zone down here. So above us, we clearly have, let's see here, these two guys, which still haven't been tapped, our weekly open, which we kind of swept and then subsequently kind of like pretty aggressively dropped from. And then I left this guy on just to note that we did actually take out last week's weekly point of control. We'll leave that on until we get to some of the lower time frames. And there's an untapped level here too, just so we can see exactly how and when they were taken. And then also on the weekly is the time in range. We're actually topping 9 weeks now on this one. So this is one of two things is going to happen. Either one, we're going to have the swing sometime in the next 3 days, either up or down. Down looks a little bit more probable at the moment. Or the other alternative is my plan will be completely destroyed, and this will break down from the consistent 7 to 9 week range before big moves. Not to say that last week's 5% or so wasn't a big move, but obviously we've seen upwards of 20%, 10 to 20% in some of these previous weeks when we had that sort of movement. So so maybe we have something here still, maybe we don't. I'll grasp at straws maybe another week or so before I give up on that plan, but just worth calling out that it's still something in the back of my mind. Let's go down to our daily. Let's look at our untapped levels. Just like we had some weekly levels down here, we have an untapped daily level as well as the naked point of control, which kind of makes sense. Again, same way we had when we look in the weekly time frame, how we had a order block down here on the daily time frame. You could consider this right here an order block. So again, just a place for potential demand when we originally visited it. Let me just mark this off. 24-hour order block. So again, if we come down here, unlikely to fall straight through all the way down to 20, you'd have to most likely see something like fall into the 24, 25 range, potentially range around here. A lot of times we see something like come in here, a bounce, hang out kind of on the top side, the top half of that, and hang on to the bottom half of it before potentially sweeping and coming down again. So if we do come down into this area, we'll look for that 50% range and then potentially ranging around the top before the bottom, or reverse that, range around the top and then slowly just kind of grinding down. If there's something that's a little bit less volatile potentially, but just thinking about that in terms of daily timeframes, this would be the place that I'm going to look for first to come down and sweep. And then, so let's clean up those levels that we talked about. So we swept our naked weekly and our untapped weekly level today. And when we go back to this daily, the reason I left these naked points of control on is because the last time that we were together, which would have been, let's see, when was it? Monday, Tuesday, Wednesday, Thursday. So here is where we were last week, last time we met. Line that up properly. This right here. And if you recall, there were kind of two things that we called out that were, I want to say, maybe most important at the time, or the things that were the most important in my mind. And they were both above us. Number one was we have this big old imbalance right here from the day before, from last Wednesday. But almost more important, or kind of more, let's say, urgent, or something that we see a whole lot less, was that wickless day on Wednesday. No wick on the top. That kind of stuff just doesn't happen. And when it does happen, it gets taken care of pretty darn quickly. And we went back, and I think there were 2 or 3 other examples this year where all but one of them got taken care of the next day, and that one that wasn't the next day, it was in the same week essentially. So we definitely had a long bias. Sweeping the low of that day as well meant that you had kind of cleaned up or tested whatever you needed to test from this, and was likely a good, any kind of range or kind of area down here was a reasonable place to get into a long. But we think we specifically talked about a value area play. Let me see if I can find that. Yeah, so we'll go on the lower time frame here in a second. Let's just do it right now. Let's go to the 1 hour. So these were the areas that we had circled off. This was, let's see here, Thursday at 1. So we essentially swept down below that Wednesday low. So capture of liquidity, always a good place to take, potentially take a long, especially when you're looking for higher. And then we just had that slow trickle, slow grind upwards. When you look left, you see the gap here. We had a big sweep through there and up into this little range here. And then what happens? Then we just kind of, again, ranged again, saw strength, and then swept up through this area here. So this all kind of constitutes the gap that we had from the previous day, or from earlier that week. And then this right here was that wickless, the top of the wickless candle that we pushed through. And then we had also circled up here as potential naked point of control to sweep as well, and called out the possible liquidity here. To be perfectly honest, I was out of 90% of my trade by the time we hit this naked point of control. So as soon as we kind of got past that and kept going up, I was obviously a little salty that I didn't keep stuff on longer, because I did not expect us to keep sweeping up there and going higher, because it would have been a pretty epic trade. But as it was, we did end up coming all the way up to this kind of big, this kind of, like, you can see right here, there's an hourly that's fairly aggressive down, a potential, what's it called, sell zone or a supply zone, and then further move down there. So that kind of makes sense. But the thing that I think was much more, I don't want to say obvious, but, and I think, Luke, you called this out in one of your recent I think it was like the 0.618 of this from this recent high to the low. No, I'm sorry, that's not right. It was from like lower. It was from like here. Yeah, from this area. But also there were multiple anchored VWAPs that you could have clicked from. I think this one also. Double check on that. Let's see if it'll do it for me.
Yeah, there were a few things lining up on that top. I can't remember quite what they were, but definitely, yeah, the anchored view up from the top of the range, and then that 618 as well. Yeah.
Exactly. So, super, as we've seen before, I mean, this obviously some of these kind of pushed right through it and then drop back down there, but this was a lot cleaner, but certainly a place that you could take a short. I had gotten into a short a little bit before that. I think I got up in around this daily or so and just kind of sweated for, was it 3 hours or so until it finally worked itself out. I had the idea, it's going to come back down. But I wasn't looking that high to begin with. So I didn't have all the kind of pieces of confluence that would have given me a little bit more confidence to just say, cool, man, I'll dollar cost my way up into this guy up here. So held on to it. I think I made a couple percent out of it and then hopped out just because it wasn't part of the plan and I didn't want to risk anything else. So that being said, there was a second chance to get into a short if you clicked from this high here. And same sort of thing, comes down, sweeps up, and then gets rejected from that as well and moves back down here. So yeah, I mean, really the long and short is that, we had a pretty good call in terms of where this was heading and why it was heading there. It just kind of overshot expectations, which is, not a bad thing at all. So if we would have had a meeting between now and then, I think I had mentioned similar stuff in terms of looking at the hourly. You had, some pretty big kind of aggressive wicks here. You had a, very clean one right here, fair value gap, which we obviously came down and targeted, swept through that. We're right near the bottom of this value area from here. And you might say, well, that's a super random place to put this. But I believe this is the, and we were building these value areas kind of based on the original big one. And this essentially, when I think we got into this one, was when we fell out of the larger range here. So do not have, there we go. That's the one. Yeah. So as soon as here's this value area, as soon as we fell out of here and exited, we started to build this value area out and then just use this as kind of like a little sub area. And as we've said before, you can just kind of fractal this. When you exit out of this guy, again, you can do the exact same thing. You can just build another fixed range pull. And then once you end up closing on a higher time frame outside of that value area and back into your original, you can kind of like say, okay, this has served its purpose. It's above there. I'm back inside of this larger, this range right here, this light blue range here. It acted as support. So, there's a couple of different ways and reasons that you can kind of use that as a reference. And then if we did the same thing over here above the range, let's pull from here and here. So on a higher time frame, like an hour or so, you can, sorry, it's getting a little bit busy. Let me clean up some of these. And let me, that is not right. Rows. Okay, that's better. 60% and developing. That's weird. I totally just reset that default. But anyway, so yeah, same thing here. Once you're outside of this range, you can build a value area or build a fixed range pull. We've talked about waiting until price essentially stabilizes. If you're not somebody who wants to try to guess at something like this, you could have waited until you put in kind of a value area high top here and then come back down, reclaim something like this point of control, and then played it again. So you come down and just kind of let it go until you stabilize down here, maybe lower time frame, 15 minutes, change market structure, take it back up. You can see it clearly respected the top of this new kind of sub range to do another short, and then again falls out of this little sub range that we have above here. So we can just delete that now that we're back over here. And essentially, what do we see? Bounce off of point of control, move up a little bit before it comes back down and almost tags the bottom of the value area here. Usually when this happens, I kind of let it, like I'll take some profit off just in case, but the number of times that this situation where it front runs it by like a couple, like a percent or two, it usually does come back. So I'm kind of not entirely, assuming that we're just this was a bottom and we're gonna swing up. We could definitely come down again. We'll zoom out again and take another look. But you can see we cleaned up that fair value gap. We put a new one in, we cleaned it up again. We're sitting below that gap again now. And we're inside the range, rejecting off of this point of control. So if you're not in a trade right now, and we continue to hold, let's just say this lower, I'm going to make it really big for right now, and then we'll zoom in a little bit and see if there's some place we can find now, or someplace that's a little bit better. But we've got a couple of things going for us. We have, let me hide these VWAPs. We have the value area low of this larger region, which has slowly been expanding to the downside. So we've reclaimed that and we're above there. Even if we're talking about this slightly smaller range here, we're still, looking up. We're on the bottom half of the chart. So if we did something like sweeping this low, but no, that's not a low. Sweeping this low, which would essentially take out liquidity of these wicks, and then had a decent response off of it, 15-minute or so market structure change back up, we might have a good opportunity for a long to take it back to the top of this range again, where we would be looking to exit. Let me get my brush right here, which is two things. Number one, it's value area high. Number two, it's another imbalance, fair value gap, yada, 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 whatever you want to call it. So I'm looking to hold this region down here. If we hold this region down here, we've got a little bit of high volume node right here. That's going to be potential resistance. Obviously, point of control is always a little bit of resistance. We like to wiggle around that for a while before I move up here. So I wouldn't necessarily get scared of price hanging out here for a little while before a potential move up. If we move down and we kind of lose this area and stay lost, stay kind of outside this, again, we're on the hourly, something like losing this, closing maybe 2 times, not just a close and then a regain, but a close and then another close below there. I'll have a little bit more pause for potentially move lower, because you've got just on higher time frame market structure situation. We've got our, oh gosh, I need to go all the way up here, don't I? Our high, low, lower high, lower low, lower high, lower low, lower high. And now we've got essentially this guy here as the low. We've got a break for continuation, or we've got to sweep this guy for a potential change in market structure and move back up. Obviously, that's kind of high in this range here, but an hourly change in market structure would be would signal potentially that you're not just going to reclaim this here, but that you're going to potentially maybe move all the way up to the top here, that 28.7 or so. And then let's see where our dailies, and yeah, so we've got that untapped daily up there. We have points of reference to potentially sweep. If we came up that high, we would probably do something like 28.9 potentially. And what's above that? That would be just, I mean, then you had to worry about just reaccepting back here, maybe even just peaking up and then looking potentially past this. I don't know if we've got that kind of strength macro wise. It's summertime. People are going on vacation. If you guys listen to what's his name? There's another really well-known order flow guy, Cannering Clark, who comes from traditional markets. He was an oil trader for a while, if I recall correctly, and that's kind of where he made his money before coming over to crypto. But he lives outside of Manhattan and Long Island, and literally is like, yeah, like this is the time when most of the big traders are chilling a little bit. They've had to pay all of their gigantic tax bills and whatnot. They're enjoying their summer homes up in the Hamptons and whatnot. So that's why you will potentially see a little bit less volatility in the markets, because it's when a lot of Wall Street kind of takes some time and takes some vacation. So if we did see some more chill price action over the next month or so, that could be part of the reason. What is it? To sell in May and go away, or whatever that phrase is that people say. Looking here, though, it looks like we do have a little bit of a pullback in the dollar. So something like that could facilitate this continuation, this kind of continued move up. If we see, we had to move up, move down, move up, maybe we come back down, we start, maybe the dollar coils. But that kind of move down, or that kind of start of a move down, could mean that Bitcoin is going to come back up and start to make back some of what it lost here in the beginning in the middle of May. So, Luke, now that I've ranted like a crazy person, what you got? Got anything? Am I a crazy person? Does that make any sense whatsoever?
I was listening, and yeah, I am happy because, well, everything's lining up with a very, very similar idea to what I've got as well. So I did a quick post earlier just when I got home, just going off of like the 3 main points of interest that I'm looking at, just to make it kind of simple. So it's 27,600, 28,900, and 25,200. Which is exactly what you've just drawn as well. So
I'll be damned.
That's nice for myself. So I think first of all, I'm like you say, I'm open to because we've got this developing value area, which at the moment is just expanding somewhat from what you've just been showing. And I think, like you say, very reasonable to expect that we can start to maybe push down just towards those lows again. It's Asia session, so I mean we're fairly close to the lows anyway. It's almost like one of those where it'd be a shame not to just go and take that low again. There's been a lot of spot selling, so I think we're seeing a lot of CVD. I haven't checked it, but I would imagine we're seeing some bullish CVD around here. It seems to me that would make sense if we are. I don't know if anyone has a CVD in front of them and can see, or like aggro or anything, to see if we're building some bullish CVD against those lows. For me, that would make sense. And yeah, we are, aren't we? Is that it?
Yeah, so we're only doing there. Yeah, it's pushing down, but I mean, price is like kind of responding a little bit to it. But
yeah, so we're seeing a little bit of absorption here. I do think that can lead to maybe a bit of a squeeze a few hours into Asia session. We seem to be getting these bigger moves during Asia, so maybe open to it sweeping those again, because this can obviously be leading, but then you just look for a quick SFP, like very, very briefly, just take the liquidity, bring it back into the range again, and then go for that 27.6, which I do think is just going to be a draw. I think price is just going to be drawn towards there just because of the speed of the move we had down. It was just liquidations, I think, and a lot of stops being hit, mine included, from that little debate we had on Wednesday. So I do think that it's likely we end up with price seeking back up into that area. Then Um, I mean, at that point, I think good opportunity to look for shorts. We've got poor lows on the day, by the look of that TPO that you just brought up.
Yeah, so I was gonna say
So,
the last couple of days have been like that. We've just kind of like, I mean, we had a flat one here. We had a second day of flatness here. I mean, between Sunday and Monday, that made sense. That was Sunday and Monday holiday. So, and what happened? Like, if people who don't pay attention to these things don't know about double bottoms, don't know about that sort of stuff,
yeah,
got smashed here, which is why, like you said, there's that quick move down, and what happens? It happened again. Now we've got. This is why I didn't actually take a long yesterday, was because I didn't realize it. It looked like it was a straight up double bottom and it was going to be flat, but it ended up not being. But as you can see, yeah, today we have another one set up. So let's go down and take that before move up. And not only that, but it also might be it might be nice because we've had this pattern the last couple of days where what happens, like we have our open with a sweep up and then aggressive down move. And then we trickle back up, open, aggressive down move. Like, I don't trust that's going to happen 3 days in a row. That's like a little too, like, I don't say obvious. So let's do this. Let's do the opposite. Let's grind down, sweep, and then take it back and do that kind of midweek. I mean, it's not midweek anymore. It's almost late week, but that reversal, and then come up into that maybe for the weekend and see maybe some sort of price pop. I don't know.
yeah, yeah. I think that's it. I think that's what I'd like to see. And at that stage, you're getting back in towards um previous. You're going to be back above like some of the anchored VWAPs that we've got around here. You're going to get back above that value area potentially if there is a move. So, I mean, at that point, if we are to see a move up towards 27.6, I would look for a short position down towards the 20
The, the 25
5-ish.
too. Yeah.
Yeah. But if it can hold, let's say if it's holding somewhere around where that wickless daily candle level is or something like that, after we can do it, you just start to put in a range after coming up, then that it could lead to that push up towards the 28,900, which is my other point of interest. So yeah, certainly with a long bias here at the moment, but still would like to see take liquidity, wide stop on this. I'm still hedged in a short position, so I'm like more long than short right now, building that long position, but still hedged, and have a couple of orders below the red line that you've just drawn on the chart, just in case we do get a sweep down there. This is more of like a general kind of not swing trading, but playing the range, playing the spread that we have here, and just trying to extract from it some money with like little intraday trades in between, really.
Yeah. I mean, maybe that might
So
be
that's
like the thing that kind of mitigates my weekly plan is the fact that we are maybe a little bit lower volume than usual. And actually probably need to just straight up look at that. And maybe that's just an indication that, listen, we're going to put in these little ranges and then move a little bit and another little range and then move a little bit. And it's not going to be these gigantic swings that we see, a $4,000 or $5,000, push one direction or the other, because the people who are doing that aren't around to do it. I mean, we've got this kind of looks like a slowly gradual, lower peaks. The only thing that I would at all be worried about, and I don't think it would happen right away, or it would happen slowly, or it would happen in dark pools, is as of today/yesterday, depending upon where you live, that was Hong Kong's official opening and being legal for them to, is it the retail trading of Bitcoin or cryptocurrencies? I mean, even then it's pretty limited in terms of what can be done, but obviously Bitcoin and Ethereum are at the top of that list. So you'd expect that some level of official Asian interest. So, Asian and specific Chinese institutions or Hong Kong institutions start to get in. And, that's obviously a potentially huge untapped market. And the people who I kind of trust in, in the market or, trust and actually have some reasonable things to say are like, listen, if there's something that's going to drive another bull run, it would be silly to not think that potentially that's Asian because of the official bans and Bitcoin and something like China. And if things go well in Hong Kong as the test bed, then our goal, our hope, maybe, and I think you said it, maybe I think I've said it, is what, like mid 2024-ish or so is when we potentially, after the next halving, we kind of do a repeat of what we did back in 2019, 2020, where that's when we start to see the real big move. But this is the time that some of the large players, I think, would maybe try to get in low enough such that it would be worthwhile, you've got a macro scale, kind of a long-term scale to see stuff. But personally, I still rather see lower, but I'll this mid-20s, like that would be a pretty great level in the short term to play because it seems to be just hanging around here. So
Yeah, I'd agree. I think that it's a nice catalyst, isn't it? Like China suddenly opening up miraculously just before we have the next halving event. They'll switch all the miners back on. They'll create all this pressure and all of that. It's a nice little narrative that could be played. I'm going to shoot off now, but thank you for the very in-depth analysis. It's insightful as always. So I'll let you get on with the rest of it. I'm just gonna need to get some sleep. But
thanks for stopping in, man. Always great to have you here, and I'll look forward to talking to you tomorrow and the rest of this week.
Cool. All right. Thanks a lot, mate.
Yeah, bye-bye.
Bye-bye.
Okay, so obviously big thanks to Luke for showing up. Right as one coach goes away, we have another coach that I saw sitting in the attendees group. So Swooping Hawk, thank you for showing up. We were talking about you earlier. I thought we talked about you. We're going to probably make it, but I wasn't sure. So good to have you here.
Yes, thank you.
So we went over macro stuff before. There's two charts here that I wanted to kind of go over and talk just a little bit about. One is not too in depth, and the other one is just barely more in depth. But after that, if you want, I can toss it over to you, and we can do some harmonic stuff if that's cool with you.
Yep, sounds great.
Okay, fantastic. So we've talked about this this chart before, the liquidity chart, essentially all USDT and all USDC put together. The last 3 weeks we've had a slow move down in liquidity. So again, no giant infusions of cash that would suggest that there's huge institutional money coming into the market to drive a real honest to God bull market per se. So more of the same, but something we got to keep track of every time we're here, just because it is obviously last time this happened, it was pretty indicative of some moves up here. So that's one part of it. And then the other part, or other thing that I wanted to show, and this is really more of a general education type thing than any specific idea that I had, because I've been playing with it a little bit and want to at least expose everybody to it, because it's one of those features that most people I don't think realize that TradingView can do. And what it is TradingView can do some very simple math in your indicators here. And what this is a chart of BTC, ETH, BTC USD, and ETH USD directly kind of like one for one correlated with each other, like just a literal chart saying like this divided by this. I know that we obviously have ETH over BTC as an instrument, but what's interesting is that you can do this with literally anything. So we could do NVD. So what we could do is, and let me do Bitcoin against NVIDIA, for example. If you thought that there was some unique play or some unique kind of correlation between the two of these companies, because of whatever it might be, maybe it's not NVIDIA, but actually, I'll tell you what, there's a much better one. There is, what is it? MSTR MicroStrategy. So MicroStrategy, Mr. Michael Saylor's all his war chest of Bitcoins. And so essentially what you could do is you could say that something to the effect of buying something like MicroStrategy is a proxy for purchasing Bitcoin long term. We all expect somebody like Michael Saylor to be buying Bitcoin with the expectation that he's a long-term hodler. He's somebody who is let's just say a Warren Buffett, but with digital assets. And so he's somebody who's going to be buying Bitcoin and Ethereum and, other high liquidity cryptocurrencies with the expectation that they are going to significantly appreciate over the next 10 to 20 years. And what then you can do is look at Bitcoin itself, and you can kind of like essentially see as Bitcoin price trades, it's got essentially the ratio between Bitcoin and MicroStrategy, saying that like Bitcoin is losing value compared to MicroStrategy on the move down here. So for a while, one might say like, that people think that Michael Saylor knows something, and so MicroStrategy comes with a specific premium potentially for Bitcoin, and so as such, if the price of MicroStrategy is at a discount to what you might see in Bitcoin, then that means that people don't have a very, let's say, strong outlook on Bitcoin, because you would expect that people who are institutional are willing to pay a little bit of a premium for a little bit more of a, let's say, risk off, a little less risky type asset, as a secondary, as kind of like a secondary way to play Bitcoin instead of investing in Bitcoin and all the volatility that comes with it. Another one that's very similar in nature might be something like Coinbase, where you'd expect in a bull market that Coinbase is going to be freaking making bank because of the increase in trading and trading fees and custodian fees and all the things that come along with cryptocurrency ownership. However, since 2022, Bitcoin, the ratio of the value of Bitcoin to the value of Coinbase has gone up significantly. So people are saying that, listen, just like Bitcoin as an individual instrument itself is worth far more than Coinbase. And as such, we can expect that Coinbase is not going to have as much value because they're not making as much in trading fees and other things as kind of a play. You can do this similarly with stuff like oil, commodity like oil, and something like Exxon or BP or Shell or somebody like that, where you can essentially take the underlying the underlying asset and put it up against the actual company that uses or makes money off of that, to see kind of what the market thinks about that asset and its long-term outlook, or maybe medium to long-term outlook, whether people rather just invest in the asset or say, you know what, I don't need all the volatility that comes with energy. I'll just invest in something like oil directly, in something like BP, and not have to worry about all the volatility for that particular commodity. So you can do this with anything. I know we've also shown in the past the 1 over, which gives you the inverse price, is it 1 over or is it 1 minus? Oh, that's part of it. What is it? Regular. Yeah, there we go. Okay, cool. Yeah, so it's a good way to potentially, if you to look at a chart and say, like I'm looking at this chart here, and kind of a flat top here, and then a move down, and hey, I think that this area here is important, so I expect price to come down here. But long term, this looks like double tops, and I would want to see that top taken care of. And then you zoom out and go, okay, that's what Bitcoin price is doing. It's just a way to kind of maybe get rid of some of your bias, either bullish or bearish in a given asset, and come at it at a different angle and say, like, if the chart looks bullish in one direction, if I flip it over, does it still look bearish? Or if I flip it over, does it look bullish also? In which case, I really got to take a look closer as to which direction, which bias is maybe stronger, and not just, kind of think of things in the same linear fashion that you always do, but kind of flip things on its head in almost a literal fashion. And it wasn't a literal way to see if things still look the same, if your price action and your wicks and everything have an oppositeness to them, because looking backwards, looking to the left of where we are right now, I see all kinds of big gaps here in price, imbalances that I would expect to be taken in the same way that these here were swept up in this area here. So what do I see? Imbalances here and here and here, and then I see them all the way down here as well, which in reality would be up here if we flip the chart over. So it's just a matter of which of those get taken first, and how that will be compared to how that will interact with things like the dollar and the greater market. So there's a couple of other little things you can do, if I recall correctly. Like there's the addition that I was showing earlier with BTC or with USDC and USDT. But yeah, you can do basic math to get some pretty clever little charts as well. And that might be particularly useful, especially if you're doing or investing in things like, let's see here, in just some, well, we did it before, but if you're listing essentially, maybe smaller cap coins against Bitcoin to kind of see what, on a macro level, what they have, maybe one is outperforming the other, and you can use that chart to kind of continue on with, or, use that to show that, you might have as we've said before, a leverage, or kind of the smaller cap coins act like a leveraged Bitcoin essentially, and be able to use it like that. So that being said, I think I've gone off on a little bit rails of that one, but yeah, hopefully y'all will take a chance to look at that a little more closely, and hopefully it'll help y'all's trading a little bit potentially in the longer term. We're moving down here a little bit. That's kind of what Luke and I were talking about, potentially expecting something a little bit lower before a sweep up to clean up some of the higher imbalances. So that's good, but nothing low enough right now to make any trades. So that being said, Hawk, if you would like to go ahead and I will unshare my screen, and I will, let's see here, change rules, and rename. Let me see if I can unshare first, and then stop share. Okay, and I think you should have permissions. Let me know if you don't.
No, I don't.
Okay, I'm gonna switch you to host. Okay, you're host, so you should be able to share now.
Okay.
Super.
Yay. So I guess there's Bitcoin and we're moving down. So very good. Yeah, so I mean, in terms of Bitcoin, I'll cover that first. On the higher time frames, we had some harmonics, and we reached the first targets of all of them. So, you know, now we would be looking for a retest of the harmonics, and I would be looking down here at the crab and the Gartley. So that, yeah, is like a bit lower. So, yeah, on the smaller timeframes today, it did look like we were going to get a bounce. But if you have a look at the downtrend, so if I take off all the, take off the harmonics and stuff, you can see that, yeah, we're just in a strong downtrend at the moment. So until we have a bit of consolidation and the strength to move out of it, it's more likely we continue down since we've rejected off some key levels today. Yep. So, I mean, yeah. I mean, you talked about volume a fair bit today, but yeah, I just also thought it's interesting if you take the volume from that downtrend that we've seen over the last few days, I guess. Yeah, there's like a massive gap in it. So, yeah, this node is holding as resistance.
Yeah, you expect to be taken care of at some point, but it's one of those things where a lot of times you get the gap, and then you get a slightly smaller gap on the way back up, and then a slightly smaller gap on the way back down until you finally kind of fill it in to some degree, and then you see the actual movement or something like that. So that's why I'm kind of hoping we sweep down here and then just kind of keep filling that gap in a little bit more.
Yeah. I mean, yeah, so I agree. I mean, you can either get like a swing failure pattern off that, or, you know, you can be looking at a bit lower, in which case, you know, I obviously will be looking at my harmonics because that's what I'm all about. So, yeah, so the levels there, like 26.1, or thereabouts. Also on the indicators, so if you're looking at RSI, it's starting to turn back down, and it's just not looking bullish at all. So, yep, and it's like that on a lot of the time frames now. So the daily, I mean, it could turn back up here, but I mean, the probability of it turning back up, unless I start seeing a W shape being put in, which would involve a bit of work, I wouldn't necessarily expect it. So yeah, not particularly bullish at the moment, but we'll see how it goes. Yeah, so in my opinion, I mean, the better place to be at the moment is traditional markets. So not so much the indexes, because if we look at the SPX, I mean, we're still basically around the same area as last time I was here. I think we're a bit higher, but not by too much. Because it's just a whole bunch of well, I don't really like to use the word chop, but it kind of is a little bit choppy. It's just a slow grind upwards, and you've just got like lots of resistance. That's all. And last time I was on the call, yeah, I was sort of saying that it's not the type of thing that you're just going to blast through, and it's just going to take some time. So yeah, I'm still of that opinion, and we are in an area of interest because we do have the bearish bat that was formed, and we did have an initial reaction to that 886, and today we've come back to retest it. So this is very common with harmonic patterns, is you'll get a retest of the terminal bar, and yeah, so over the coming days, we want to see if this level holds. If so, the probability that we'll see a dip will increase. So that's what I'm going to be looking at over the coming days. I mean, I can't tell you if it's going to go up or down at this point in time. You can, because it's just sitting at that key level, right? And it's like that on, so the 4 hours got the same thing. The 1 hour also has a bearish harmonic, and it's the hourly rejected off it. So you can see that across the time frames, we are printing bearish harmonics, which is usually a sign that we would at least get a breather, and, you know, perhaps, you know, come down and retest some levels a bit lower, because I just find that when you get the same type of harmonic, like all bearish harmonics across multiple time frames, that's something that happens, is it will eventually play out. So that's going to develop over the coming day or two. I mean, tomorrow's Friday, so Friday's generally not a trend change day. But yeah, if we hover around this area and then keep an eye on it early next week, I think they'll give some clarity then. So NASDAQ is, well, yeah, it's pretty strong. And the Qs are the other one to look at. The Qs basically look the same as the NASDAQ. It's just the ETF of it. Yeah, so we had a bearish harmonic, and this is the type of thing that I'll be looking for in the SPX. So SPX, so you can see here for the NASDAQ, you had the terminal bar print, then we had a bearish day, and then a bullish day. And so it's just testing that terminal bar, which is also a key resistance. If you look left, there's just a whole bunch of things in terms of market structure that's also there. So this is the sort of thing that you want to look for on SPX. So what's going to happen at this terminal bar area? Is it going to hold as resistance and we're going to see a dip down? Or are we going to dip down and blast through it like this, which is quite bullish? Yeah, or you could obviously continue down. So they're kind of your options. And so it's this type of thing that I'll be looking for over the coming days on SPX to see what happens. But NASDAQ, I mean, there's no signs that it's done yet. So yeah, there's still room for expansion. So I would be looking higher on that. And I mean, you have some of the tech stocks now that are all-time highs, or basically getting there. So yeah, it's pretty significant. So Apple's like, I mean, almost right there. And it's very strong. Like it's firmly and strongly in an uptrend. I mean, obviously it's not one to trade unless you're day trading, because I mean it can go a lot higher, but you're also buying at high prices there. But Microsoft is another one that's in a similar boat where you're basically come right up to your highs. So you're testing these highs. So it's significant areas that these are at, and NVIDIA, obviously, which you spoke about, which
I really wanted to ask you about this one because of what happened on whatever it was Wednesday. Because that big move up, I was going to be like, really wanted to see what Harmonic was going to show up.
Yeah, so for this, that was very significant because at that time, I think we were at this, at this bearish harmonic, and we just sort of came above, which was quite bullish. And it was like, okay, so are we going to progress from here? And then earnings came out and whoosh, and you're just like, oh my gosh. So
yeah, for anybody who doesn't know, it not only beat earnings, it beat earnings by like a lot. I think it was like 90 cents to like, it was like expected 90 something cents, and actual was like $1.13 or something like that. So I recall. That being said, I mean, I think a lot of that was driven by a lot of the I think the like AI chips and kind of the stuff that they're working on around that. So like it's pretty cool. I don't know if it can sustain that. Which really will be the test here. I mean, because yeah, when you have a move like that, I know if a crypto trader saw something like that, well, that feels like an imbalance to me. So like I would expect maybe some sort of pullback potentially before further move on. But like in traditional markets, and when you're looking at harmonics, like what do you do with that? Like what's your, like if somebody said you have to come up with a trade for this for the next couple of days, weeks or so, what would you look for either continuation or for a pullback?
So dividends are on the 7th of June. So people will probably hang on till then, I would say, if they haven't sold by now.
Okay.
Yeah, so I mean, we're holding here. I would expect to range a bit if you want to keep this as support and not fall down. You can also look at this as a bit of a breakaway gap, because I mean, you've got significant volume coming in here for a number of days as well. So when you see that type of thing on a gap up, it's more likely to hold rather than fill immediately. So it is possible to go up, and I would be eyeing the 1.618, and then it could come down. So that's something that I would look at. But for that to occur, I mean, the fib level is the 113 currently. So I'll be looking for that to hold. I wouldn't want it to go below that and trade it up to the 1.618. That would be the trade I would take if I had to choose one. So yeah.
Speaking of trades, Bitcoin has taken yesterday's low and is just kind of looks like it's sweeping around here. So I've got a small position, that just a resting order on that previous low. But we'll see if it just continues on, or if there's some sort of trap value area, something that could give us what you call it. But I'll keep you updated, or I'll keep everybody updated with anything further I do while we're going through the rest of these harmonics and stuff. But we did take that low. Just want to let y'all know.
That's good. Yeah, so I mean, that's NVIDIA. It's like a beast. I don't know. Nothing can stop NVIDIA, it seems. That's what it seems like. Yeah.
Right on.
But others that haven't gone as far, that are better trades right now, or if you're not in, or to day trade with a bit more room to run, would be something like Tesla, where you've come up, you sort of came down, but now you're moving up again. So this one, hasn't been as strong, but it's starting to move quite well. It's still within the range currently, because you can look at this area as your range. And yeah, so I guess that's what you're looking for at the moment, is for it to break up out of that, which, given what other stocks have done in tech, it wouldn't be surprising for Tesla to do that. And yeah, on the lower time frames, it's moved really quite well over the past few
Everybody's going to
days.
take all of their NVIDIA winnings and go buy some Teslas. So that's what you do, right?
Yeah. And I mean, Netflix has moved over the last few days, but that last week, that was another one. Because Netflix, yeah, it's like done pretty well, and it's in a solid uptrend. It did gap up today, unfortunately, because it came to that point of control here, and yeah, I don't know, nothing stops it. They're all techs really strong at the moment. And yeah, obliterated that bearish harmonic too. So yeah, that would be another one to look out for. It's starting to get a little bit up there in price, but if you compare it to what the other tech stocks have done, it hasn't done that much. And I mean, you would be looking at targeting, 886 on something like that, probably. Then, oh yeah, PayPal. Let's check out PayPal, because I think it's actually starting to turn around, maybe slightly. Oh my God, I haven't been here for ages, but
Holy crap. I have not looked at that for billionaires too. Wow.
yeah, PayPal sunk like the Titanic.
Jeez.
I know, to think it was like so much money and now it's like $63 and you're just like, wow.
Yeah.
Because what did it get up to? It was like crazy.
Three something?
Yeah.
Like literally a 308. Yeah.
Yeah, basically 310, and now it's like $63. So yeah, I mean, that's what happens. And if you just take fibs, you're at the all-time 886.
One might be forgiven for looking at that and expect that you're looking at a shit coin, but no, you're looking at PayPal. Who, let's be honest, I still use on a fairly regular basis. So
yeah, so I mean, it's at a significant value area to consider trades. And then on the daily time frame, you've got the bat there. So it just it just needs to hold this level. It may range a little bit more because it really hasn't done much basing here, but yeah, I would be looking for a little bit more ranging and to then start moving upwards if that's going to do anything. If it fails, it completely fails. Like it's going to go way lower. And then what's the other one? Oh yeah, Intel. So I mean, Intel's been like basically the range down the bottom is just your buy zone for this one. But yeah, it hasn't moved either much compared to the others. It's starting to make progress within the range, and you've got the higher lows and everything. So this is another one to keep an eye on as well. So, because that one's got a bit of room to run on it for the future too.
Fantastic.
So,
well, cool. I'll tell you what, I'm gonna take back the screen for a minute while we've got this actual price action that's actually doing something, which, let's be honest, we never freaking see. So
sorry. Yeah, I can talk about stocks for a while. So the next ones to watch are the miners. So Riot and Mara.
Oh yeah. We'll you know what we'll do is let me I can't share my damn screen. Oh, I've got to take hosting back from you 1 second. Reclaim host. Share screen. Okay. Yeah, so let me know when you can see my screen again. Did you see my? Yes. Okay,
Yes.
there we go. Cool. Yeah, I would actually love to talk about the miners and stuff because that's another one that I forgot about. When you talk about the using the Bitcoin math to do correlations and whatnot for Bitcoin. But yeah, I mean, this is kind of what we talked about, and that's why I kind of interrupted there for a second. This is my lower time frame, 3 minute. Here was our low from this was Thursday, right? Yeah, there's our Thursday low. We just did a real quick sweep of that low where I got in initially, and then I added a little bit when we closed above that line again. And as you can see, we're continuing to move up. What I was kind of interested in, the fact that our net shorts, for no real particular reason right here, we had, a bunch of shorts kind of just exiting out of positions. And then you started to build up again. And that time when it was actually built up, and mind you, this is a 5 minute chart. I was trying to find a cleaner trap value area. You can see them kind of building. And then you had whoever was essentially in longs, which if we look at our lower time frame chart, who is in longs? I mean, that's everybody, from potentially the last, let's say 2 days, who, maybe let's just say from yesterday, that was building positions, expecting a grind up, but that hopefully will have swept that low. We've already made our, I got in around, was it 536? Yeah, 536 was my first. So if you're doing a 0.5% take profit, you'll have already taken profit at least once. I am taking right now with that sweep up. And then what I'm hoping is that, let's see, we'll kind of see where we top off at. There's no real imbalances down here. Like we've got a little bit up here. So if we had like a shallow pullback, that'd be fine. But looking more at exo charts, what I'd like to, even though we had that move down, like this continued up with more shorts. So I would, once we see shorts kind of start to fall off, and let me go down to the 3 minute, I might go in a little bit more and kind of add back to the position again. But I've covered all my fees and everything, and now I'm just gonna kind of, I want to say, wait. A little bit of a trap value area up there. CVD, oh, there we go. There's a tried, you saw that, how it went from like 200,000 to like 1 million, and price did not do anything. And it looks like maybe they exit out of some right away. But yeah, looking here on the resting buy positions, 1.7, 500,000, 600,000, 950, 2.6, 2.1, 1.3, 1 million. So definitely imbalance on the resting buy position. That was part of the reason why I went in on that trade, in addition to sweeping that kind of known lows. Not to say that we, couldn't come lower and, do that kind of sweep, but that clears that up. And what else did we do? We obviously have a nice tail here. We might have too much of a tail. You never know with that sort of stuff. But we did, looks like we came right at a, let's see. There was any other naked point of control down here. There was not, but as I mentioned before, this is that sub range that we were talking about. We hit value area low. That's a fairly reasonable kind of sweep for the asymmetrical trade. The only reason why I would be totally okay with getting out of this trade if I did see things go sideways is because of what we had mentioned earlier. And that we have our lower highs and lower lows. So this is now officially a lower high. This is now officially a lower low, which means that we now have a slight adjustment of what we need to break to have a market structure change. So we need to essentially break out of, and I'll just make it a box. It'll be a little bit easier. So here's our current high that we're working on and our current low that we're working on. So this is the box, this is the range that we are going to have to break out of onto the upside to see a market structure change. Otherwise, we stay inside here. Kind of maybe the longer you say that we stay inside this box, the more likely it is we're going to just kind of grind down again, sweep again, and just have lower highs and lower lows. So good place for a potential for a long position. If you got in and got out, super duper. It might be lagging a little bit. Sometimes it's a second or two, well, maybe a couple of seconds behind, depending upon just my upload bandwidth isn't always the greatest sometimes. So maybe switching back and forth exacerbated that. But let me know if I'm super, okay, cool. Yeah, it will catch up. But yeah, like I said, the long and short here is that if we break this high up here at was it 27 177 and then come in for a pullback and then continue on, then that might be our sign of a potential change in market structure. Just looking at the volume here, you know, we had lower volume, so just less essentially at this low as we've been kind of seeing these volume peaks. So that, you know, until it's happened, you're not really sure if that just means that there's less interest down here or less force pushing it down. So we'll obviously have to wait for the response to see where this goes. But we took out that low, and I'm also going to right away clean up some of these naked points of control that we were talking about earlier that I was leaving on for demonstration purposes. Let's see what else. We have a new open down here on our daily, and let's see our weekly. Let me hide the daily stuff. That got really cluttered really quickly. Okay, I think I cleaned up all the weekly stuff. So all the weekly stuff we're good. Here's another, I think, important reference point as well, higher time frame wise, is if we want to actually potentially see a move back up into some of these upper ranges here, we would have to essentially start breaking some, you know, like this weekly open, for example. So we'd have to kind of like start to take that. We're nowhere near challenging that. So right now, still bearish. I think you still have to have a bit of a bearish bias, like Luke was talking about, because, you know, we are kind of on these medium time frames looking fairly bearish. We had a move up that got swatted down pretty quickly. So this is our best bet at the time being for a long, I think. So yeah. Let's go back here, take a look and see if anything else is going on here, low time frame. So let's see, is who's all here? Is Mr. Shane here? He left. Dang it. Okay. I'll next week I'll go over it. But I've got another this guy down here is that ADX, the directional index, and ADX indicator I've been using with a little bit of modification, and there's another one I've built out using RSI in a similar fashion, where I'm not worried about oversold and overbought nearly as much. Actually using RSI at lower kind of compressed levels to actually look for potential continuations. So these pink candles here are essentially saying that the strength down is getting near the kind of, let's say, oversold, but my oversold is not up at like 80, 85 where they normally are. It's actually much lower. So it's saying that price kind of has a negative bias to it. So we're playing with that one a little bit, but as you can see, we're still getting a little bit of strength here. So that's cool. So we may have gotten ourselves into a fairly decent position. As I said before, when Luke was on, the hope here maybe is that we do the opposite of what we have been doing the last couple of days. I know I had a stat sheet a while back that gave or some information around the fact that like the plurality of all daily highs and daily lows are within like, I think within like 2 hours of daily open, one side or the other. And that the rest of the daily highs and lows are usually some, kind of spread, kind of trickle throughout the high volatility areas, but there's definitely a higher concentration of those kind of highs and lows at the beginning or end of a day, UTZ0. So if we do see that, this can be another one of those situations where you have that, you either have really high volatility or no volatility at all. This is the first time we've had any volatility in a couple of weeks. So hopefully that gave you all a little bit of confidence to hopefully make a bit of a trade here and hopefully make a couple of bucks out of it. Let's see, what did I say? 25. Let's just go there, and we are already at almost 1% from kind of a reasonable entry below. If you took a swipe right at the previous low, you're at 0.6, and if you were a sniper, you will have already made 1% on this trade. So yeah, I think at this point it's just monitoring stuff from here. There is a gap right here in the price on the 3-minute chart here, a little fair value gap. So let's see, there's our low. Let's see, if we did right into the golden pocket, I could see us coming up to, yeah, I would expect us to not quite hit that high. Let's see, what's our market structure? Let's see what our happy September says. RSI bars. So yeah, 3-minute, we've broken this high right here, that lower high. So 3-minute, we're bullish. So again, it's been a while since we actually had a trade worth talking about in that kind of context, but we talk about the bullish market structure, a little bit of a pullback to bearish market structure, getting in on that little bit of pullback before a move higher. So if you didn't get in, you're looking to potentially get in. I could see an area somewhere here in this range, maybe even as low as this 26.5, that 83% or so pullback. So yeah, I mean, I could see that might be a little too far. But yeah, somewhere right around here, if we see some sort of pullback to get in on a higher lower or a higher low before continuing on up. So so they are significant in whatever I would say whatever time range you're trading in. So let me put it this way. Don't confuse fair value gaps on the 4-hour, or don't really try to reference an hourly or a 4-hour fair value gap when you're trading and when you're looking at low time frame entries like this. If you're looking at low time frame entries, you're looking to kind of scalp your way or kind of get yourself into a position, then 3-minute, 5-minute fair value gaps can be a good way to get into kind of an optimal position for day trades and just intraday trades. if you're looking at higher time frames like we were over here in these trades, then you don't necessarily need to be looking at those 3-minute ones to have any sort of real, context on that. This one right here that we talked about before, that's a potential target, and I'm going to circle up to this line since we're essentially it's from here to here are the imbalances. You're really just this is a situation where you're looking at higher time frames to get into entries. If you're lucky, this could have been your entry for that kind of test of a recent low to get into. But kind of the target for this, like to build a position around this, I would say you'd want to see the crack above that, pull back, and then continuation on. Like that's kind of the I don't say the common knowledge, but like the kind of like standard way of describing that. If you talk with people who do stuff with the ICT or just kind of general market structure and imbalances and stuff, it's usually waiting for markets, looking for a potential target, whether that target is a fair value gap or previous areas of liquidity. You're looking for that market structure change, and then you can kind of say, okay, how am I going to get out of my trade? Like, what's a good place to get out of the trade with some kind of high confidence that you are, number one, going to make it there, and number two, that you could see a potential reversal. I mean, in the situation like this, what I would expect to happen is we break market structure, we come back a little bit, we come up to at least this area again, so the bottom of this gap here, and then maybe see a little bit of resistance and another pullback before we actually sweep it. Usually the fair value gaps act like a little bit of resistance before they fully break. As you can see here by these candles right here, was that last Thursday, essentially. They attempted to come up into the fair value gap that was created on Wednesday, got rejected for a further move lower. And then, here we are. We are where we are. So I would love to see something like this. I'd love to see an actual, break a market structure and a pullback before getting in maybe with a little bit more size and a little bit stricter invalidation than just kind of these smaller sizes, the smaller kind of like scalp positions that can turn into swing trades. But I'm certainly not basing this target here on the 3-minute chart and the price action there. So hopefully if that makes a little bit of sense, let me know if that was clear or cool. Yeah. So yeah, well, what we can do also is we will put I always like to put the alarms a little bit lower. Add alert. Let's see here. Possible bullish MMS break 1 hour. Look. Pull back, then larger. So what I'll try to do also is if we do actually get that market structure break here, I'll try to alert, and we'll try to maybe use this as a reference trade to kind of go through. And over the next couple of days, assuming that things don't either fall off the edge of the earth here or go flying past that, that it kind of progresses in a reasonable fashion. We'll try to follow this trade and see what we can gather out of it, and if we can make this a little bit more detailed journal style that I do in the coach's corner. So what I will do right away is, here's what we're gonna do. We're gonna clear all that out. We're going to put our fair value gap right here, template, FEG general. And let's call this one possible target. Okay. Current range. Not break up, break above. Break above. Or bullish move structure change. Okay, it's coming back a little bit. So yeah, so our plan, and I'll put this in my coach's corner, will be looking for this to break up, pull back, and then hit here for number one. And then who knows what's going to happen. And then here for number, that is not working, for number two. So let me snapshot that, copy in. Oh, let me also put the entry, initial entry, and why we got in. Oh, look at that. I actually didn't even see that. We actually took out that level as well. Which, okay, it's worth watching. PD low. Stretch this guy out. And shrink all that. Okay, cool. Copy image. Okay, let's see what's going on here on low time frame, if there's anything that we can share. Some more shorts tried to push down with nothing, and they immediately kind of exited, which caused that move up. And 26.7, is that actually updating on me? 26.717 is the price. 26.716. Okay, yeah. More longs exiting. That was weird. Unless there was a really big, I guess, scalp out of that. So yeah, we just have to watch this to see what happens. I mean, I haven't paid as close attention as I wanted to with some of P's stuff, but we could, I know he usually just keeps this guy in histogram mode for the side that he's looking at, potentially to start kind of really exiting out of positions. The only thing I could potentially see is that there weren't enough short positions that were entered into down here to kind of squeeze our way up. So if we do come down again, it could just be another situation where we just keep SFPing to get more shorts interested before a larger reverse up. What could be the recent recent invalidation for the recent S&P? There's another liquidity level at 26,306. 26,3. Let's go to our higher time frame chart here. 26. Is that this guy down here? Let's see, is that so essentially in this area here? Yeah, I mean, here's the thing. If that isn't the sweep of the low, I would actually just use the low that we have right now as our invalidation. I think that's a pretty reasonable place because if we start to come in here, then I almost feel as though these levels get taken out as well. And we see either a sweep really low into the Luke level. Let's see, where that at? Yeah, there's our order block. Where was that other level I put for him? But that 25.2 essentially. So the top of that order block is where Luke was talking about too. So I almost feel like that was a good enough place to just have a one-time, like, this is my trade. I got in, I took a little bit of profit. If I get stopped out at this point, I get stopped out, and I just wait for something higher. So, or wait for, well, I either wait for one of two things. I either wait for coming down into this level, in which case, let me put a couple other alerts in here. Sweep of range lows. And let's put one right here also. But yeah, I will go a little bit deeper into that one second. Top of range. Okay, so yeah, so for the reasons, it's like very different reasons why you get into some of these trades. So for this particular one that I got into, this is the reason here. This is the kind of more overriding plan. We've had this value area that we've been bouncing back and forth on, deviating below, deviating above. We put a couple of lows near the bottom. This is kind of what I mentioned at the beginning of the feed, that oftentimes when you see these situations where it like front runs it like looks for a little bit of kind of seeking some liquidity before it finally comes down and actually swipes that value area low. Well, there you go, hit the value area low, and actually did it for real. And once we actually have that real hit, that real test of the lower edge of the range, that's why I'm saying good reason to get into a trade to take it to the top here. If you did get in on that trade and you did get in fairly near these low levels, take profit 1 right here at the point of control of this range, take profit 2, and I'm sorry, there's too many ranges here that are causing, okay, there we go. Take profit 1 right there, take profit 2, potentially right there for this kind of, let's just say this trade here. Now we're going to potentially be doing multiple trades. They're going to cross over this for different reasons, being this market structure change trade. But it's, again, because the point of control is a high volume area, it's a place where you see a lot of resistance and support, depending upon which direction you're coming in on. Really, you just see a lot of price action sticking in that area. It's a good place to take profit. Situation like this where you re-entered the value area, you hit point of control, and then you came back down and tested value area low again before coming back up. So it's a place where you see support and resistance, price rejection, potentially for reversal. So that's why we're looking for that as a take profit, and that's why I'm looking for where I get it in as a low. If, like I said, if that gets stopped out, then we look for one of two things. We either look for, like I said, just coming down lower, taking out some of these previous lows, maybe a sweep of those lows before moving up, or a full-on push into this 25.2-ish area. But considering this, what we have here, I would expect a lower high, lower low, lower high, lower low. So it's really about coming up with a plan in both ways to what will happen, having multiple options, seeing which option at the time is the best one. If we come here and sweep this high right here, and we do break that market structure and we see a lower high, I would love to see us come down and then use this point of control as support, and then be able to use that kind of key level, which then lines up as two different things. It lines up as a higher low. It lines up as this, this level of high volume, which is going to hold us depending upon what sort of price we actually see. Maybe let me do like a fib pull here. Let's say this is our low, and let's see. Yeah, that's by the time we get up there, 0.6 is already a pullback, so that's not really something that we can use on that particular thing. But yeah, that was a really long and drawn out answer to what you said or what you asked. So current low is really what we're going to use as our invalidation, because we are on a bearish market structure on the hourly here. And that's kind of a little bit higher time frame, and as it's a little higher time frame, it's a little more override than just kind of this one-off little sweep of a low. So yeah, I feel like as long as we keep this low here, that first one we swept, that that's a sign that there's people buying down here and that we're going to see another move up. But yeah, if we fall through there, I'll be happy to just, I'll take that loss, or well, breakish, evenish. I'll have to see what it turns out as, but we'll take that and just let it go, and then wait for some sign of larger strength and market structure change before potentially getting into another long. So yeah, I hope that answers a little bit. Which or answers your question, or if it's not, let me know and I will try to clean it up a little bit. But yeah, at this point, yeah, sure, glad to be of assistance. At this point, it looks like a little bit of, I don't know, looks like a little bit of acceptance. A little bit of shorts kind of exiting out here, but not much really going on. Yeah, I mean, it's worth noting with that move down and the price action we have had, you've got a poor high on the day. Granted, it's only an hour and a half in to the day, so that's not super significant. But as I like to show sometimes, is I'll merge the day before with the opening, and we actually have a really freaking nice profile here when you get that composite TPO chart back into the, actually, hold on a second, reset. Yeah, back into the value area of yesterday range. So let's hope for at least a move up to that naked let's see, that naked point of control actually probably lines up with the point of control of the range. Let's see here. We haven't added that back to our chart yet, have we? 26,875. 26. Let's go to our daily. Let's go to our naked points of control. Let's hide all of this stuff temporarily. We'll sort it out a little bit later. Okay, let's duplicate this guy. 28,675. And the point of control is right there as well. So yeah, so that's a really good place to take profit. So if you did get in on that trade, set some limit orders, 875 at that area. Let's see here. Okay, got another set up there. With daily open. Is it? Let's see here. Look a little below. Actually almost came up and touched that. So yeah, I mean, that's yet another sign, kind of another piece of confluence. If we regain our daily open, that's always a little bit, you know, if you essentially you range below it, play below that, and then flip daily open, you know, that's usually a fairly bullish kind of price action. You know, something like this a couple of days ago, you range above, you fall below, you attempt to reclaim, you fail, and you know, so there's a bearish sign. Same thing right here. You know, initial opens right here, we come up, range around a little bit, fall through a little bit of wick up, but never actually saw any movement there past it. This is actually this one's even better here. Back on Saturday, the May 27th, we kind of ranged around a little bit, came kind of deep below, hit value area low, reclaimed daily open, and then moved up and had that giant move that we saw over the weekend. So yeah, that's going to be another sign of strength, hopefully. Here's the New York session open. Yeah. Yeah, we had a pretty darn big opening range that first hour there. And just kind of looking historically, when you have that kind of little bigger open, what the hell happened? Oh, I moved. Okay, there we go. Big range. Here's a reversal. Big range, reversal. Big range. Yeah, it seems like when you have a kind of a significant open, that that kind of signifies some volatility, that you're gonna definitely gonna potentially have a move out of that. But I mean, I guess small ones do that too. But anyway, yeah, that'd be something to look at in terms of statistically speaking. Like if you're within a certain size, you know, X points or X number of dollars open, maybe you see a particularly large move or small move or something. So let me look at my 15-minute chart here. Okay. Yeah, that's really all we got, I think. So we're almost let's see here, almost an hour 45 into it. Does anybody have any last minute type questions or so? If not, I think majority of the move that we're going to see during the open here was made, and at this point it's waiting to see if the plan succeeds and we get our move up, fingers crossed, or the plan fails and we just wait. Essentially, we just kind of have to wait until we get into another situation where we either see strength and we buy the pullback, or we get into another key level that we're going to look for a potential long from, whether it's these lower liquidity levels here, top of an old range. I tell you what, you know, who said that? What did you say before? That 26,306? 26,306. I tell you what, there's one other place that I might look for something, and that is right here. Let me shrink this guy. And that is one of those clear little range here. You had a big fair value gap into the range. You exited out of it pretty aggressively as well. So that kind of constitutes a little miniature range. You have a daily naked point of control here, but your range point of control is up here. So, I mean, I guess there's one other place right here that I would potentially just kind of look around. If we came down here and then saw a market structure change from here, or hitting one of these levels and scalping a very strict 0.5% position, get out of 75-80% of the position type situation, that would be another particular option for a trade that's lower, that's a long from lower. Otherwise, the Luke low is a pretty good one, along with sweeps of these liquidity here. Otherwise, at this point, I kind of want to see higher, and I would like to see some of this taken. So, how do you use the anchor VWAP for day trading, and how do you find which hour or into anchor? Thanks, Cam, for your time. Sure thing. Thanks, After Cam, always for coming along. We appreciate you showing up. SKC. So anchored VWAPs. So here's what I will say about anchored VWAPs. There's two ways of handling them, I think, or kind of using them. I don't use, I feel like they have to be used on a somewhat higher time frames. And I say higher time frame, I mean like a maybe 15-minute, half hour or more. I don't think they're going to be super useful below that time frame, or there's just going to be way too much chop. Here's an hour. Let's go down to a half hour and see what it looks like. Yeah, so there's two places that I will use unanchored VWAP. The first place is a macro high or macro low. Obviously, you don't always know when your macro high and your macro low is, but what you can do is you can use them as a reference point to invalidate your idea that you put in, let's just call it a swing high or swing low. So you put in this low, you draw, and actually, let me do this. Actually, let me draw 3 different ones, because you wouldn't know at the time it happened that was going to be our local low. So let's do that one, and let's do this one here. And let's color them yellow for the first one, orange for the second one, and red for the third one. And let me get rid of their things to clean them up. So what you might do is you get what you think is a macro low. You actually, did I do that right? Oh, yellow is the actual one. Let me switch these, or else I'm going to confuse myself. Okay, there we go. Okay, cool. So you put this first click VWAP on, this anchored VWAP. You put it on there. You come out of it. You see a sweep below it. You're feeling pretty good. You see another, close and a sweep below and back above it. You're feeling pretty good. You're using a little higher time frame and validation, which means you're going to give it a candle close or two to work its way out. If in this particular case, saying let's say you close twice below the anchored VWAP, or maybe some percentage, and that's why I have this standard deviation set up for them. Oops, cancel that. Because that's actually probably a little better way, because it gives you a little bit of kind of ability to handle some volatility. But anyway, so you see a move here, and then what happens? It comes back around. Your anchored VWAP is no longer looking that great. You've had a solid candle close through there, and And at that case, you're thinking, nah, probably not the greatest. Like that might not be the actual one we're going for. So you come back down, you sweep this low, you close above it. Volume looks good. You click on this one, and what happens? You have this barely touches it. It doesn't even touch it this first time, and it just sweeps through it and comes right out of it the second time. So you already have 2 attempts to test this anchored VWAP, and in both cases, when you came near it, the buyers were in control and pulled you out of it. The first time, not even touching it. The second time, a solid kind of like sweep through, that if you look at the confluence of this little mini range right here, you could have said, oh, hey, there was a sweep through value area low and then a reclaim. That's just a little bit of extra confluence to say that we've got some strength here, that we're in some sort of asymmetric trade, where you've tested, some inefficiencies or some lower levels and it didn't work out for that. So you're feeling pretty good. For the heck of it, the fact that we came a little bit lower here, we'll also check that too, just to see kind of what it does. But ultimately, this yellow or this orange one is the one we want because it is the lowest of the low. So really, you can just say like, listen, I'm going to stay in this trade as long as I don't see any sort of significant closes here below it. Like you said, you had those very casual sweeps through, and that's about it. And it wasn't until you got up here and you saw a larger, higher time frame market structure change, which in all honesty, you probably could have gotten out of your trade from there with a much better, higher, closer, invalidation, and not, lost as much instead of coming all the way back down here. So really, it's almost like a way to get into a trade and just use as a reference kind of early as you're looking at bottoms potentially. The 2 ways around, or the 2 additional ways you can use it is either number one, you close through that level like pretty hard like this one, and you've got bearish market structure and it didn't necessarily line up with anything else, and you could say, okay, that was just a reference point for this one trade and it really doesn't have much meaning anymore to it, and you can just go ahead and throw it away and it doesn't really much help anymore. In the same way that we did up here for these higher time frame ones. So let's go and click on these 2. Yeah, so then in this case, this is kind of the other way you can use it. Very high time frame over the course of multiple months. You can use those highs and lows. Yeah, exactly. I'm sorry, I didn't even see your comment there, but yeah, the first way in a macro scale is to use them off of significant highs and lows, and when price comes back towards that area, and then either breaks it and continues on in the opposite direction, you can say that's no longer useful. Or in this case, like here, you can say it broke above and then fell back below. It broke above, fell back below, and you can keep it on your chart for a while, and it actually has some meaning to it. And you can just kind of play the long game and saying like, listen, you're going to have some chop around here, but over the course of a month and a half or so, it actually still had some meaning to it. The other way, is that I've seen it is even on higher time frames, is using it essentially when you had a really big breakout of some sort, not necessarily at the low itself, but where you actually saw a breakout, because you would assume that in a trade like this, that the longs were, very much in control here on Monday, April 10th. And if that level is lost, then that means a lot of people who move the price 4.5% in one day are no longer in control of price, and things will probably be reversing. So when we do that and we click here, you can say, okay, we held that for 1, 2, 3, 4, 5, 6 days. On the 6th day, you're turning down a little bit, which shows that that price is probably going to potentially be the price is going to potentially be turning. You close below it, you close below it, you close below it again. you've now said that like all of the long positions and the volume for this ride, this drive up here, this push up has now exhausted. Like everybody who was pushing this up here and the volume above this candle is now kind of gone. Those people have either exited their positions or given up on their positions, and you can expect to see lower lows. In which case, once you break that level, and see lower lows, then okay, you broke it. That's no longer useful. It's a much stricter way of handling things. Same way this one is. Big candle down, kind of initially. So again, another 5% move. And then you say, okay, we're still below this candle. We're closing below that anchored VWAP. Shorts are still in control. Shorts are still in control. Shorts are still in control. We're starting to kind of like range here a little bit. We've broken above. Now, granted, that was the crazy wick day. But again, you can just kind of get a general sentiment around the fact that the people who started these a move one way or the other have essentially exhausted their position. You come down to the hourly, it's a little bit better, and like it's a little bit easier to follow in terms of seeing that all the people pushing this down have either exited their position or they're being overridden by people who are buying down here and getting a move back up, in which case you see this close above here and you say, okay, that was a pretty big candle there. So, maybe we're going to do the same sort of thing we did on that daily, but we're going to do it on the hourly. So we're going to base this off of people who have helped us, or volume has helped break out of this. And what happens, same thing here, that as long as we close above that, it's pushed us up. We obviously had that was FOMC day or one of those days. So there's a little bit of kind of wackiness around that. So the theory kind of breaks down to some degree, in so much that you did have a pretty aggressive move below. That being said, you did reclaim it, and you did kind of like range around a bit more above it, showing that there was still some strength, and that the longs who got in down here were still they were willing to buy down here and push back up again and keep it in control. And it wasn't until you had this close here, again, big candle, spike in volume. Okay, let's reset our reference again. And you can kind of see close below here, as long as we keep closing below that line. And that's why I said you can do, there we go. There's our upper. You can kind of use that line maybe as a little bit of a buffer, essentially. And really, yeah, 0.25, that's fine. Keep going. And then what happens? Like, obviously if you got into a trade here-ish, you're going to take profit as you see those kind of big moves down, because you got what, a 1.5% move, 1% move. So, ostensibly you probably have taken, profit at least once or twice. And then what happens? Big candle, big volume increase. Let's reset our click VWAP. This one's a little harder. This one you could have very easily gotten shaken out of the trade. You may have made a little bit for it, but let's say you failed there, but you see that big candle. Okay, what about that guy? Same thing. Came up, moved here. So yeah, that's a little harder trade on there. It may have actually behooved you by just keeping the candle once you reclaimed it, by just keeping it, let's see, from here. So like I said, I mean, I'm making up a trading strategy on the fly here. I just know that that's how a lot of people or some other people use it as well. They see big price movements and they say, I want to anchor VWAP from that big price movement to see if the people who caused it to move in one direction are going to keep above that volume weighted average, meaning that they are still in control and that they are still pushing in the direction that they started the move. So either significant highs and lows or significant volume events, volume candles. If you're in traditional markets, you may use anchored VWAP for really big news events or other earnings reports, something like Nvidia that Swooping Hawk was going over before, you might want to put an anchored VWAP on the price on the opening of whatever it was, Wednesday, Thursday. So yeah, I mean, like I said, it's sure thing. Absolutely. It's that actually might be something I actually make as I talk through this, I realize that there are actually a lot more scenarios than I really give it credit for sometimes. So maybe we'll do a video that goes over some of these, and I'll actually try to do a little bit more back testing from to give a little bit more, hey, that's actually a fairly good strategy or fairly good bias essentially to base off of. Because I mean, let's see where we are at right now. Hey, look at that. Still doing pretty well for that open. So here's what we could say is you could put an anchored VWAP there for our open, or which obviously you need some time for that to develop, or you can say, here was a significant down candle. If we reclaim that, things will look good. Here's a significant down candle. If we reclaim that, things look even better for a bullish move. So, and actually the other one I want to look at is right here. Yeah, that one's a little harder to, that's a 2-hour chart. That's weird. Yeah. You can even look, but there you go. Or honestly, exactly, or take profit. I mean, that's a totally reasonable way, because if this is your reference, if this high up here is your reference, and we say that the shorts are in control from this high here, if you took a long scalp here for some reason and you were like, sweet, I'm going to take profit when it hits this anchored VWAP, you would have taken profit here, and you might have taken it again. You might have gotten to a long there potentially if you broke out, depending upon some rules. I mean, we could probably come up with, like I said, 2 closes above, or maybe a close and some significant volume above, when it got in. But I mean, if I'm looking here at this volume here versus this here, looks like there was higher volume in this move here. So yeah, it's hitting, but it's not breaking through. It hasn't actually had enough volume to push it. So we'll say, it's got to have more volume than what created the candle or something like that. But yeah, I mean, like I said, come there, you take profit. If you got in here, then yeah, like this anchored VWAP would be a very reasonable place to take profit when it hits. Now, granted, it's going to be dynamic, so you're going to have to watch it kind of come down as it comes closer. Look at it once an hour to see where you have to set your take profit. But yeah, that makes it's one man's support is another man's resistance, depending upon which side of the chart you're looking at. So anywho, yeah. Great question. Actually, we haven't talked a lot about anchored VWAP because we really haven't been able to use it a whole lot. I don't think until we hit this guy from that higher time frame thing. But it's something I might be playing with a little bit more since you bring that up. It might have some legs for another strategy we can give everybody, and we can probably set some potential volume constraints. It's been a while since I've talked about it, but we could probably do some specific level, like what maybe like 30 million or so. Every time we see a 30 million candle, we take a look at it and see kind of what it looks like, and draw, if we see a big candle of a large imbalanced candle, a large gapped candle, and use that as a reference for trading for the next couple of days. So yeah, so like I said, we're still just kind of ranging around here a little bit, and so yeah, I'll continue to watch. Looks like we've actually had a little bit of a move up. We have a low time frame market structure change on 3-minute and 5-minute. and not quite yet on the 15-minute. So we'll keep watching it, but yeah, if you have, I think I'm gonna cut it now. I have actually have another call I have to be on at 10:30, which is kind of crazy. So I got another hour for that. But yeah, if you guys have any questions, shoot me a message, and we'll go over it some more, and then we'll be on tomorrow as usual. Hopefully, I'll have some time to make P's morning meeting if we have that as well. So thank you guys very much for hanging out. Swooping Hawk, thank you very much for coming and sharing some traditional market stuff. Always super duper useful and interesting. And yeah, look forward to talking to you all on Discord later. Cool. Bye-bye.